Welcome back to Morning Markets on Thursday the 14th of October. The key events from yesterday driving market moves were the release of the US inflation print for September and also the Federal Open Market Committee, so the Federal Reserve Central Bank in the US, minutes from the September meeting. In terms of the US consumer price inflation print, the report released yesterday demonstrated a 0.4% month-on-month increase in headline inflation print and 0.2% for core prices, the latter stripping out the more volatile aspects of food, which were up 4.6%, and energy prices, which we've discussed on morning markets in recent weeks. They've been experiencing a sustained price rise. They were up around 24.8% over the month. Within the month-on-month reading, despite the continued delays in the delivery of new cars, given supply chain challenges, we did see a moderation in the pace in which prices of used vehicles were increasing. So whilst it is showing a slight increase, it is a moderation from the rate which we were seeing back in June and July. Airfares were also down month-on-month, down around 6.4%. The year-on-year headline number came in 0.1% higher than the August print at 5.4%. The core number remained unchanged and in line with expectations at 4%. In terms of the Federal Reserve minutes, in the afternoon we had the release of the FOMC minutes for the September meeting, which set the stage for a $15 billion monthly reduction in the purchases of assets. Essentially that's split between $10 billion of treasuries and $5 billion in agency mortgage-backed securities. The taper is expected to begin in November and conclude near the middle of 2022, though several Fed officials voiced support for a faster reduction in the pace of this programme, though the Fed will remain sensitive to financial conditions as this is working through. In terms of the market reaction yesterday in bonds, it was a positive day for sovereign bonds with yields moving lower. The moves were more pronounced at the longer end of the yield curve, so longer maturity, which is more sensitive to inflationary expectations relative to the shorter end of the curve, which is more sensitive to interest rate expectations. The minutes showing that action is very much on the cards from the Federal Reserve at this point. So just looking at those moves, in terms of US 10-year Treasury yield, that was 1.54%, so in 4 basis points, and UK 10-year gilt yields 1.08%, so in 6.2 basis points. In terms of equities, in sterling terms, a positive day for equities in the main, the large cap technology companies, which are more sensitive to higher financing costs due to the market's expectation on earnings, which is emphasised in the Nasdaq in these numbers, showed strong performance spurred on by those lower bond yields, therefore lower financing costs. In terms of the UK, the FTSE 100 was up 16 basis points, 0.16%. In the US, the S&P 500 up 0.3%. And the Nasdaq, more technology focused, was up 0.73%. Europe, also a strong day, up 70 basis points. Japan was down at the margin around 50 basis points. And Asia, outside of Japan, was positive 0.2%. In terms of currency markets, the dollar was slightly weaker on the day, down around 0.5%. The Dixie Index at 94. Sterling against the dollar, 137 sterling against the euro, 118. In terms of commodity markets, gold was slightly stronger. It was up around 1.9%, and oil came in very marginally. We're sitting at around $83.4 per barrel for a barrel of Brent crude. Thank you very much for watching. We look forward to bringing you up to date tomorrow here on Morning Markets.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.